Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Thursday. We're at June 29th. Can you believe it? June's going to be behind us already. I'm already getting cold from October. I'm laughing at that. Interesting day. The revisions to the first quarter GDP, blowouts. Much stronger in the first quarter than the market thought. At first, it drops all the stock indices, and then again, the naysayers stepped right in there and bought most of them. The one that didn't go up most of the day was the NASDAQ. It doesn't have to. It's had its big run. The others are now in the rotation phase where, hey, we'll be okay, and we keep running, and that's what you're getting here in the S&P and the Dow and the like. The dollar's stronger because if you took a look and you saw strong GDP and then you looked at the job list, both initial and continuing claims, they dropped again. So this is exactly what the Fed doesn't want to see. You're getting the labor staying, and I want to say that, the labor staying very sticky. We saw a stronger first quarter. We're just ending this quarter, so we're going to get some preliminary numbers in July about how this quarter's all looking to us and see where we're at and what the markets are doing for it. But here's how I'm viewing things. I'm viewing it that the economy continues to surprise to the upside. The resilience of the economy is nothing less than outstanding. If people have money and can get jobs, and that's basically what's going on, because as they get to the unemployment roll, they're off of it like that. You see that in the claims because there's plenty of jobs to be had if they want to work. If somebody's looking for that perfect job and they're not going to take anything less than that, they're always going to be unemployed. All right. But if you're realistic and you want something in a field or a different field, there's plenty of opportunity out there. The service industry is strong. Now, tomorrow we're going to get what's going on with the personal income, the spending of people. So be ready for those numbers. We get some PCE numbers, and the markets like those numbers. We're going to get the Chicago PMIs tomorrow. We'll find out if the economy picked up in this region. As a whole, they haven't been going gangbusters. They're expecting it from a 40 reading to about a 43 reading. So they are looking for a little bit better. New home sales, if you saw them today, no, they didn't do. These are the pending home sales of, I don't think they were new. I think they were just pending home sales. They weren't that strong. What we know is strong is the demand for the brand new homes, and they're on fire. And yet mortgage rates keep climbing, and the market doesn't seem to care about it. When we take a look at the market, we're finishing up everything. So for the week, and remember, this will be for the month eventually, but for the week, you're up 1%. Look at how strong this market continues to stay. When we look at the action, you still have a pattern of higher lows and higher highs. The market allowed traders, if they wanted to buy against the 18-day average of closes this week, to do so, and they've got something of a reward in their hand. The resistance is up here at the 44.85 level. Market gets, in my opinion, in trouble if it gets under 43.6850. Barring that, as long as momentum doesn't turn back down, the trade can grind higher. And I want to use that word, grind higher. The NASDAQ is the opposite. You're in a corrective mode because this market had a rocket ship run. In part AI, in part because the NASDAQ has done well. Did you look at Apple today? It's like $1 away from being a $3 trillion valuation. Unbelievable. But lower highs, lower lows, but the support's the 18-day average. Frankly, if you take out 2 days ago's high right over there, and I can come to it for you, I think. Yeah, right here. If this market clears 15,218.75 and not getting through the lows of today, watch out. You could be all of a sudden up here. This takes leadership. It'll carry a lot of the other markets with you, if it does. When we take a look at the Dow, we had a correction. It was unable to make even a run to the 100, the Bollinger Band, the 100-day average in the green, and instead it's latched back on to the 18-day average of closes. I think the pros are buying this market. The naysayers were there today. When they saw these reports and the market fell back, because we had early gains in the day that were very nice in most indices, they got gobbled up like that, and away you went. When you look at the Russell, I don't know. This is the one that I'm not really in love with. It seems to me that the Johnny-come-latelys are trying to buy this, hoping it'll eventually pop. Having come from a background in commodities where you watch spreads and what they do, people inevitably go, oh, that back month I got it back because the front's up. It doesn't work that way. There's a reason the other indices are up and this one is laggard. When we look at the bond market, whoa. The market just all of a sudden caved in when it saw today's data, right back down to the Bollinger Band. Now notice where it stopped. Have I been saying, and I go on these videos, they're all up there on YouTube. I thought when we developed this sideways action, you'd churn like this, and this is the thing to avoid. I said it, go listen. It has been. If you bought it trying to get through, you didn't do it. If you sell it from here trying to get through, I don't think you're going to succeed. I think you're in a no-man market. That's not the case in the 5-year. The 5-year has been staying consistently under the 18-day average of closes. That is bearish action. And now it's deciding, now after this, is it going to embed? So you can't count today's number because we don't know where Friday will finish. But we can go to Thursday. Both numbers were not under 20. Nah. You just have an oversold market that's at the bottom of a Bollinger Band. I think I'll wait and see what it does. But no matter how bearish I get, I would never tell a client to sell under that. Go to our website, under the word education, Bollinger Bands. The course is there. You want to educate yourself with it. 15 video chapters. You will get an education. In the dollar index, okay, so what we've had is called a kiss. What do I mean by that? Notice how the dollar was far away from the 100-day. So now the market falls down. It's like a skid mark. Is it going to cross under, or is it going to skid that and turn back up? If it skids and turns up, you could be opening up the door for right back here, the 103.79. Why? Well, the Fed's probably getting another bout of rate hikes. The economy's super strong. It's not going to break the economy. The resilience is great. That's a bullish makeup for the dollar, not a bearish makeup, all right? Bearish would be you keep raising rates, the economy's weakening, you don't want to own the dollar, you want to own that economy stronger. That's not what's going on. The euro's got the opposite story. They got to keep weakening it. Now, I was looking in Germany, their CPIs today, right through the roof. So there's big problems still here. They've got to fight that, and they're going to drive it down here. Notice where you got down to, the 100-day average in that number. Close under these numbers, right here, the 109, let's say, close under 109 even. You got a problem. You could open the door up for even more of a break in these markets. In the British pound, when you lost the embedded reading, I told you before you got up there, I thought you'd go back to the 18-day average. Bingo, definitely happened. And now we have to wait. But all of Europe's currencies, you heard Bailey, the Bank of England governor, you heard Miss Lagarde, the European Central Bank, they're all going with more rates. And until they can get this inflation under control, they're determined. Their economies are not doing what America has done. America is just like a monster engine that's not stopping. China has weakened. They have weakened. We are the powerhouse. That's why the dollar's rallying with that at the moment. In the Bitcoin, all right, now you want to get away from June. So please, everybody, wave your arm. This is the last time I'm showing you the June. It goes off the board tomorrow. I've already made the changes for my morning subscriber videos. In Brent versus WTI, you can see how you've slipped under that 18-day average again. So we've gone from a lot of strength backwards. Now I got to get rid of August. It goes off the board right now. So we're done looking at it. You got to move to the September in this. So say goodbye to this as well. Let me do it with you. So long. Bye-bye. You've been very good. But what about it? Because we still have a day of trading. It won't matter. The SEP follows it very closely. You're caught in this sideways action where you keep dropping to the Bollinger Bands. You find the support. Now, OPEC meets, I think it's July 5th and 6th, so it's right around the corner. They've already told Bloomberg, CNBC, and the Wall Street Journal, don't even bother to send your reporters. They are barred. They did this on the last report. They're doing it now. I don't know what those different agencies have done. They're obviously not saying what OPEC wants them to say in some manner. So they don't get them there. I don't know if that's good or bad, but there's going to be a lot of talk. We've yet to see, we're just about to get into July, what the Saudis are going to do with their cuts. We're going to hear if people are meeting quotas, over quotas. Are they adhering to what OPEC wants? Will there be any infighting? I haven't the slightest idea. You know, normally you hear from the Russians, the meeting's coming up and there's going to be no material change. They haven't said a word. Not one. And I look for that because you look for tell signs, and I'm not seeing it yet. So I don't know what to expect. I do know on a chart what to tell you. If this market gets over 74.89, that will change the pattern and you will no longer have the downtrend, which has found its support. That would then give you a lower low, higher high. And again, you just be stuck in sideways action. WTI's there. The market's still caught in this action of back and forth, but it's primarily between the 18-day average to the Bollinger Band, momentum trying to come up. If we look at the last rally high in this market, which is always an important part here, that was 70.15. And if you take a look now, you got through it right there, and that's what you're doing. You're just sort of hanging. You're not trending. You're just like in the Brent, you are paying attention to the lower bands. If you don't have those bands on your chart, you'd wonder, why is the market stopping there? Got to learn to work with them. I don't see anything in gasoline. I think I've been a broken record telling you don't buy it for July 4th, and so far it's proven to be a pretty good idea. And then in the nat gas, now I'm waiting to see if we get the heat or not. The market got down, came back a little bit today. It's staying over the 18-day average, but it's not a favorable looking chart. It's one of these weird looking charts that's not acting like it wants to go anywhere. Want to remind you, if you use TradingView, all of my indicators, including the outside day course, are there for you. But you have to activate them on our website. That's how it works. So you go to my website at iraepstein.com. You go into the client resources, look at the charting software. As soon as you click it, you're going to see TradingView. You sign up there, then we, for you in the morning, turn everything on. You will have outside days. You'll have the swing line study. You will have my slow stochastic version versus the one you're using. And a host of other things that I think you'll find interesting. Your charts will look just like mine. How do I know? I use TradingView. I use my charting software, but we pay attention to different things. So I hope this has made sense to you. You have yourself a good day. I'll see you first thing in the morning. Take care.